Hey guys, we are back with video 17 in this series. We're looking at DVY. We want to determine how much of DVY we need to hold in our portfolios to hit $1,000 a month. We've done this for the past 16 ETFs here on the screen, and we're going to do this for the next remainder ETFs and any commented ETF that we see in our comments below the video. So far, these are the ETFs that have been commented: SVOL, SDIV, BST, and ENB. So what are we doing here? That we are looking at today's ETF, DVY. We're going to head over to their web page and try to determine what are they doing to be able to pay us that dividend yield. We're going to head over to Seeking Alpha and check out the historical yield and come to a single number and then plug that dividend yield number into our calculator over here, our compound interest calculator. Plug in the dividend yield number for our portfolios, and the portfolio in question would just be a single ETF, DVY. Plug in the dividend yield and then try to determine how much of that dividend ETF that we need to hold to hit $1,000 a month. Then we'll wrap up with going over to Portfolio Visualizer and comparing DVY against an S&P 500 index fund. Over on DVY's website, DVY is BlackRock's or iShares Select Dividend ETF. Well, what does that mean? What does Select Dividend mean? They seek to track the investment results of an index composed of relatively high dividend paying US equities. So what does this mean right here? Relatively high dividend paying. We'll take a peek at their highest holdings and see what type of companies that they are purchasing. Over on Seeking Alpha's DVY page, over on the holdings tab, here are the sector breakdowns, with utilities and financials being the highest weighted sectors, close to about 40 to 50% in utilities and financials. So what does that look like? Well, the top holdings are about 2%, so nothing weighted very high, nothing above 5 or 10%. So we're looking at Valero Energy, Altria, IBM, 10K Incorporated, and Gilead Sciences Incorporated, and the such as we have right here, with a total number of holdings being about 107 holdings. And most of these are going to be utilities or financial sectors. So let's take a look at how DVY has performed over the past 5 years. Here's the market price. Over the past year to year and a half, it has stayed pretty steady on its market price. The expense ratio is 0.38%, which is fairly high for a dividend ETF. Then you have the dividend 12-month trailing yield at 3.03%. Let's take a look at their historical yield. If we click max here, we can see that this is a very long historical fund. We can see that it was started somewhere in 2003, or it started paying a dividend around 2003, 2004. And you can see that after the 2008 market crash, it has ever since pretty much trended upward and to the right. So let's take a peek at what the last 12 months has looked like and see if we can come to a one dividend yield number over on their daily dividend yield graph here. So as you can see, that every day the dividend yield will fluctuate as the price fluctuates, and we come here to the last about 12 to 18 months, and you can see it's hovering around 3%. So let's use 3% as our dividend yield number to be able to determine how much of DVY we need to hold to hit $1,000 a month. Over on our calculator, if we type in DVY, now I know there's a lot going on in this calculator, so let's just focus on a few pieces of the calculator. We're going to type in DVY, we're going to type in the dividend yield as 3%, and the expense ratio is 0.38%. We're not going to play around with the growth and contribution numbers. You guys can do that yourself. If you would like access to this calculator, it's available over on Patreon. What we're going to focus on is this box down here. So this is dividends per month. So if we held $40,000 of DVY, we'd get $100 a month in dividends, and we would need $400,000 of DVY to hit $1,000 a month. We would need $2 million of DVY to hit $5,000 a month. So let's go over to Portfolio Visualizer and finish out the video and try to determine how DVY has performed against the S&P 500. So here are the graphs going back to the inception date of the newest fund, which would be around November of 2023. And we started with an initial balance of around $500,000. If you were to invest $500,000 about 20 years ago, 19 years ago, with no new addition, if you just allowed that money to grow, you can see that you would have around $2.2 or $2.6 million. And the S&P 500 with dividends reinvested did outperform DVY. And here are their cumulative annual growth rates year over year: 8.39% for DVY and 9.35% for the SPY. And if you click this box here, inflation adjusted, you can see that your 2.2 million and your 2.6 million would have been adjusted for a buying power of around 1.4 million and 1.6 million. Coming down here to what the annual incomes would have looked like, you would have expected in the past few years anywhere from 60,000 to about 69,000, having that portfolio in the 7 digits. So that's it for DVY. You would need around $400,000 at that 3% yield to hit $1,000 a month. Head down into the comments, let me know if there's another ETF that you would like to see analyzed in this way. And with that, thanks for watching.